down what I'm thinking for this morning and kind of for this week in the premium chat. And the premium chat's going to be available to everybody this week. Running a free trial. Obviously, you can see him in a little bit of a different environment currently at my parents' house. So don't have the usual two screen setup that I do. But we're going to make it work. So if we look at the premium watch list for this week, I chose 3 stocks. We'll get to that later. But for this morning, what you saw in the title is futures are kind of off to a rough start. People are a little bit worried because of the energy war that's going on with basically the Western world, Europe, US, and the Eastern world, OPEC, Russia, China. Russia is kind of the main proponent or opponent for today after they are denying to export oil to countries that are imposing this new price cap. And if you think about it, price caps aren't going to really do much of anything. That's like me going to the grocery store, picking up a $16 a pound steak and being like, yeah, actually, I'm only going to offer you $5 a pound for it. It doesn't fucking work. Excuse my French there. But price caps do not work. And it's just really increasing the attention or the tensions that we have, with the Eastern world right now. But, yeah, that's why SPY is going down this morning. If we check on the charts, it's down by 0.7%, which is actually half decent gap down. Usually the gap downs that we see are like 0.5, 0.3. Obviously today isn't Monday, so there's more, I guess, news for the market to digest. So seeing a 0.7% move, it's a little bit more likely on a Monday than a Tuesday or Wednesday when trading volume kind of starts to slow down. But yeah, that's what's going on this morning. The price caps and Russia refusing to export to those countries. The price of oil itself obviously going up on this news, because if Russia is not outputting that oil, that means that there is going to be a lower supply, and prices are simply a function of supply and demand. You have lower supply and the same demand, prices are going to go up. So EU and all the countries that are implementing these price caps are only shooting themselves in the foot. So it is what it is. Anyway, oil's going up. I do have some long oil positions. I might actually add to this. I was talking about this over the weekend and yesterday when one of my premium members brought it up to me. If we look at oil, what is it? Oil production from OPEC and exports to the United States, this is down pretty majorly. So if we look at this chart right here, this is from the Bloomberg terminal. I'm not sure where he sources from. I don't think that our premium members have access to Bloomberg, because that's like $25,000 a year. Unless you have unless you're getting an economics degree, then it's free. Kind of want to go back to school just for the Bloomberg terminal, but that's another story. Anyway, so thousands of barrels. This is thousands of barrels per day. So they went from sending us 700,000 barrels a day in, it looks like, what was September, and in recent months, so that would be October, November, they're only exporting about 100,000 barrels to the United States. And oil is, again, the price of everything is just a function of supply and demand. So obviously we're going to have lower supply because we're not really working on making our own oil. Not sure where else we would get it, because OPEC is kind of like the main exporter for oil. And then Russia plays a small role, like 10% or something like that. But Obviously, this puts the United States in a pretty sticky situation when it comes to energy prices. So yeah, I'm gonna be long on oil. I already have a long position for it. I will show y'all what I have, and I'm probably gonna add to that this morning, just based on this energy war continuing. And I had this 74.75 call debit spread, assuming that USO will be above 75, and my expiration date is December 16th. Now, I would maybe want to add some time to it. Local libraries have terminals. I might check them out when I get back home. I didn't know that at all, but thanks for that, Toxic. Yeah, anyway. So getting back to this oil trade, they're going for 31 cents. You might even be able to get it at the university now that I think about it. Like maybe they have it installed. If you go to like the specific economics school, might sneak into that. Anyway, yeah, so USO currently trading at 72. I think oil is going to keep going up based on this, based on what I've been talking about. This bid-ask spread is stupid, as always, in Robinhood. So we're going to have to go over to Aries to pull the bid-ask spread from there. I'm probably going to start trading with my Aries account soon, long puts and long call options. I need to work on actually calling them because I have a 90-day restriction. Supposedly I got flagged as a pattern day trader. I don't think that I did 3-day trades, but it is what it is. If we go to USO as a ticker that we're looking for, go to the option chain. And my expiration date was the 16th. I said that I wanted to add more time, but I'm not sure if we need to add more time. This does expire not this week, but the next week. So we are cutting it pretty close, but it is only about $2 from the bottom strike price. So these could be valued at around 40. Right now they're going for 32 is what it's telling me at least. So there is about 25% upside just based on that. Usually whenever a call debit spread is at your, or a call or put debit spread is at your long strike price. So I would be going long on buying the 73, and then I would be buying the 74, and then I'd be selling the 75. Okay, so whenever a debit spread is at the long strike price, the one that you're buying, so that would be the 74, usually spread options are valued at around 40 cents if you're close enough to your expiration date. So what I've found through my years of trading spread options is when it's at the long strike price for debit spread, they're going to be valued at around 40 cents. When it's at the short strike price for debit spread, they're typically valued at around 60 cents. So if USO did end up making its way up to 75 by my expiration date on December 16th, these options would be valued at about double what they are currently. Now the bid-ask spread on it is kind of nutty, even on Aries, 12 cents and 48 cents. We are only about 7 minutes into the market open, so maybe we wait a little bit. Usually this will kind of settle down after like 10 to 15 minutes of trading, so we'll keep tab on that. You could be able to get it at like 48 cents. I just wouldn't want to be paying that right now. Like I said, if it's at the long strike price, you'd want to pay like 40 cents, and right now these are going for 48, so you'd be overpaying for it, considering USO is currently trading at $72. So yeah, local libraries, not all but some, have the Bloomberg terminal. Yeah, I would think that like at economics, school of economics at like your local university would probably have it, but I'll check into it. Anyway, we got the VIX moving up 5% today. I do have some UVIXY shares that are probably doing okay this morning. I have 200 UVixie shares. They are just about at break even. Oh no, they're actually down 7%. So I bought them at 776. I'm planning to hold these into the Fed meeting next week on the 13th and the 14th. And I think that's going to be a pretty big event. Now, obviously, I can't guess 100% like which way it's going to go, because I don't have, the insight. I don't have can't really read into Jay Powell's mind, unfortunately, and see if they're going to do 50 or 75 basis point. I do think that there's a small chance of them doing 75 basis point. If they do 75 basis point, that would end up really kind of shaking up the market, and that would be like a circuit breaker event where it would be down 7%. I think that the likelihood, though, is more towards the 50 basis point, considering, Fed Chair Powell has kind of been alluding to that 50 basis point rate hike, and talking more about the rest of the policy, not just the pace of interest rate hikes, but the height of interest rate hikes. And that will be something that we know come the December meeting. So we're going to find the summary of economic projections, which will tell you where the Fed expects interest rates to be each year, and then in the long term, so like 6 to 10 years. So the last time that the SEP, or the summary of economic projections, came out, SPY ended up falling 4% that day. So I think that the likelihood of SPY falling is pretty high. I would probably put it along the lines of like 70%. And I would think that it would fall by about, I would say on the low end, like a 3% move on the downside would be my guess. Now, VIX is trading very low at 20, so we might not have that much volatility. But given how much the stock market has gone up in the last, I would say, couple of months, I guess, and, given that the SEP usually ends up sending the stock market down by a good 3-4%, I would probably be willing to open a trade on that. So let me look into some strike prices for next week, and I'm just going to base it on the tippy top of the market, and I think that was at 410 on Thursday. Now, I do think that there's a decent chance that we go above 410 again before maybe the end of the week. Let me double check that is the top. Let me get rid of this IVP, make our charts a little bit cleaner. Remove this study. So I'm going to make a swing trade on this. The momentum is starting to come down. We do have some data coming out that I haven't really talked about yet. And that's also in the premium watch list that I posted for this week. ISM non-manufacturing PMI is supposed to come out at 10 a.m. today. So in about 20 minutes, we should see a little bit more volatility. I don't think this is going to have like a huge impact. I don't think that PMI usually moves the stock market in a big way. But the ones that I do think are going to move the market in a bigger way, I put a little asterisk next to them. So initial jobless claims, and then the Michigan economic report, because it usually comes out with inflation expectations. So if inflation expectations are high, that means that inflation is getting entrenched into the economy, which is not what the Fed wants. So those are the two big events. Those are scheduled for Thursday and Friday. So I expect more volatility around then. BNA half the week, probably not so much. And then next week, the 13th and the 14th, the Fed meeting, expect a lot of volatility around that. So I'm going to assume 410 is the top, and I'm going to do times 0.97. So just a 3% drop would lead us down to around $398. SPY is currently trading at 405, 404.50 basically. So I'm going to open a SPY trade for next week. This is going to be a swing trade, and this is going to be a put debit spread. So if you don't have level 3 options trading, you could kind of make the same trade. And the way that you would do that is finding the break even, and then setting it at the same price level that I would assume, but that will mean that you don't get as much leverage on that trade versus a put debit spread. So it's not exactly the same. It does work similar, but not quite. So 13th and the 14th is when the Fed meeting is going to be. Let me just double check the dates. I might be wrong, but Fed meetings calendar. Yeah, 13th and the 14th. I'm going to set my expiration date for the 14th, so the same day. Actually, I don't really like doing that to myself, because usually when I hold an option into expiration, I end up taking the max loss for the trade. So I think I'm actually going to give myself either 1 or 2 extra days for it. So either the 15th or the 16th. I'll go with the 16th since it's a Friday. Probably more people that will be trading those options, so more volume, a little bit better liquidity. And this is going to be a put debit spread again, assuming that SPY will be below that 397.7 mark. So I'll just call it 398. Give myself, an extra dollar of wiggle room. These are currently going for $34 a piece. I would think that they would be going for around 60, given my price target. And, kind of like I was talking about earlier, when it's at your short strike price on the, or close to the expiration date, they're usually worth around 60 for a debit spread. So, that's about 50% upside if my assumptions are correct. And, this trade, I do have a decent amount of confidence in it. Usually I'm pretty good at predicting these, Fed meetings, what's going to happen in them. Obviously, I don't have a 100% track record. I wish that I did. But I think that I want to base this trade on how much money I think it's worth. And I would say it's worth probably around $1,200. So the way that I open a higher confidence trade is by setting how much money I want to make. And then if it's a lower confidence trade, say I thought there was a 20% chance that this works out, I would base it on how much money I'm okay with losing. So if I was, less confidence in this trade, I would probably open 10, 15 of these. So between $300 to $500 risk. I do have a $10,000 options account, so that's 3 to 5% of the portfolio. But I think that there's a good chance that this works out, and I want to make $1,200 for this trade. The max profit for each one is $62. So if we open 20, that means our max profit would be $1,260. And currently these are going for 34 cents at the bid, 40 cents now at the ask. So we're probably going to have to type in an order for 39 cents if I had to guess, which means that we're only risking about 800. So risk reward ratio on this one, pretty good. And again, my assumption is that we'll probably be at that short strike price 398 on my expiration. So these would really be going for around 60 a piece if that's the case. But I don't really, I base my, how much money I make on the max profit rather than going by, my assumption, because obviously I could be completely wrong on the price by the expiration date, and these maybe SPY's at 395 next week, or maybe it's at 405. Maybe I'm wrong, right? So got to be open-minded to be wrong, and that'll help you in your trading. Anyway, 20 of these at 39 cents a piece. Let me open this bad boy up. $760, so we got a little bit of a better fill at 38 cents a piece. I'm going to take a nice little screenshot for the Discord. Again, the premium Discord is free for this week, so y'all can follow along with the trades that I'm making. All right, So this is a new options alert. Premium 101. All right, just opened a new SPY. Sorry, I always type the strike prices first. $3.99, $3.98. Jesus Christ, I can't type. Put debit spread expiring 12/16 at 38 each. And then I'll always type my analysis. So my analysis for this one, Fed meeting next week on 13th. 14th should be extremely volatile. I think chances are they do a 50 basis point rate hike, which will be bullish, but they will be coming out with the summary of economic projections, giving their terminal rate, which is the long-term rate that they expected at, rate which is going to be higher, as they've already said, and the highest interest rate will likely be more. Not really sure how to put that in better words, but basically what I'm saying, if we go to the summary of economic projections for the last September meeting, I'll show y'all what it was last time, and they said that it's going to be higher basically. So this is a summary of economic projections. They said that the terminal rate, or what they expect in the long term, is going to be 2.3 to 3%. I think this is probably going to move up to 2.5 to 3.5%. So that would be negative if it goes up, a quarter to a half basis point for the long term. And then the highest interest rates that they expected in the last meeting, the last summary of economic projections, I should say, was 4.4 to 4.9 in 2023. Let me just double check that. Yeah. So 2023, they expect the rates to be 4.4 to 4.9%. And there's a lovely little visual that you can check out to see what are the odds of everything happening, basically, for rates. And that one, you have to Google FOMC watch. What is it? Watch tool? Yeah, Fed watch tool. And I'll link this one in the chat for y'all to pick up on. And I'll also link the SEP for last quarter in September. Whoops, that's the wrong chat to send that in. But got an alert for Occidental Oxy. That one's a pretty good one. I'm more so a fan of trading USO just because it's, not one specific company. It's betting on oil, overall energy prices, and you don't have to worry about like earnings and events for specific companies. But yeah. What are the big events happening for this week? So I posted that in the premium Discord, which is the economic calendar has only a few things on it, actually. So it's a very slow week in terms of data. Going into the Fed meeting next week on the 13th and the 14th. So we have ISM non-manufacturing PMI coming out at 10 a.m. this morning. I don't think that that's going to have any major weight to it. Tuesday, we don't have any major data coming out. Wednesday, we have non-farm productivity coming out at 8:30 in the morning. I don't think that's going to have much weight to it. We have initial jobless claims, which I do think has some weight to it, coming out at 8:30 in the morning on Thursday. And the producer price index, which last month it actually had some weight to it. It actually did move the markets in a decent way, but I think the Michigan Economic Report is probably going to have more weight to it than the PPI, or the Producer Price Index. So those are the big events for this week. And again, I'm watching a few stocks. I'm watching GME, Costco, and Lululemon. GME, I'm not sure which direction it's going to go, because it's kind of a wild card. Even if they beat, sometimes they fall. Even if they miss, sometimes they rise. GME is a very difficult stock to trade for earnings, so I think I'm just going to do a long strangle, depending on how much it costs. And I figured that actually a long strangle might not be a bad idea. Even like if you look at the historical data, like it hasn't worked out very well. I just found this platform. It's called Seeking, or not Seeking. I always say Seeking Alpha, but it's Predicting Alpha. Let me log into the damn thing, I guess. I don't know why it logs me out every time. But if we go to GME is what we need. Refresh. Scroll to the bottom. This is not the earnings tab. Earnings insights is what we need. And again, GME is a ticker. And we scroll down and we look at the long strangle, or long straddles is what the strategy they have. Not a great strategy, right? Like if you look at the performance, hasn't been good basically at all. The few times that it did do well was June of 2019, June of 2021, and March of 2021. So just a few months, or I guess a few quarters out of the last probably 12 quarters is what it looks like. So statistically, this really shouldn't work out. Given that I do want to risk less money on the options. Where is the spreadsheet tracker located? That one is in the premium start page. I will link that. Since we are free this week. Hopefully that's the right one. So that's the one, that's a skeleton for everybody to use. I'll link it here too, I guess. So this is a spreadsheet that I use to track all my trades. And then my spreadsheet is separate from this one, obviously. I don't want people typing in my numbers for me. So if we go back to that premium start page and pull up my options tracker, I do want to cover actually some previous trades that I made for transparency's sake. I ended up losing like $2,000 on Friday, which was a really fucking tough day. But mainly the reason behind the huge losses that I ended up taking was because I was kind of over ambitious with how much money I wanted to make. So y'all saw that I opened a call credit spread. SPY was trading like at 402 or 403. So it was only $1 difference between the strike price that I chose and where SPY was currently trading. So given that, I think I should have risked less money on it, or had, tempered expectations of making $2,000 for that trade. Maybe I should have, said it was like worth $800 just because of how close it was to the strike price. So being a little bit more realistic is probably a good thing to do for your trading, and not expecting, $1 million of profit with each trade that you made. Now, I do want to start sizing up my positions and, making more money. So I do kind of have to, develop that risk tolerance, but I guess I need to slowly build up rather than going from, wanting to make $800 on a trade to wanting to make $2,000 on a trade overnight. So, it'll probably be like $1,200 to $1,500 instead of the $2,000 that I wanted for that trade. But, I ended up losing like $2,000 because of that on Friday. So pretty tough losses that I ended up taking for this month. or I guess for last week, I ended up losing a total of $1,600. So not exactly the best start to the month, but hopefully this week is a nice little change. And let me type in the trade that I made already for SPY, so y'all can see how I input this trade. So it's a put debit spread. This is a bearish strategy since I'm assuming that it will come below a strike price that it's currently trading above. Expiration date was for 12/16. My strike prices were $3.99 for the long, the one that I bought, $3.98 for the one that I sold, and I opened 20 of those at 38 cents a piece. Excuse me, sorry. All right. Now let's move on to some more trades that I want to open today. I do want to open the GME long straddle strangle. Not sure which one. So a straddle is when you buy separate strike prices. No, sorry. A straddle is when you buy the same strike price that's currently at the money. So for this one, I would be buying a 27 put, 27 call. And then a strangle, you're buying separate strike prices. You can think of it like you strangle a person with two hands. That's the way that I remember it. It's kind of screwed up the way that I remember, but that's kind of what works for me. And I think there's a decent chance of either going probably below the halfway point between the 27.17 mark and the 24.42. So let's take the average 27.17 plus 24.42. We divide that by 2 or multiply it by half. Looks like SPY just went below 402.95, so we're dropping this morning. Put debit spreads might actually be a little bit more profitable, but the price we're looking at is $26 for the downside, and then for the upside, I would say that 29 mark is pretty decent. I think I just got some text messages. Yeah, telling me that SPY is sinking down to that 402 mark. Just hit 402.04, so even more pain that we're getting. That economic report just came out. Let's talk about that first before this GME trade. So if we go over to the economic calendar, actually I want to keep that tab up just so we can analyze a little bit more. But if we go over to the econ calendar, the PMI came in at 46.4 versus 46.3 expected for the S&P global composite PMI, and then the ISM, which is more heavily watched, came in at 56.5 versus 53.3 expected. So what the PMI is, I think it's the producer management index. Let me just double check. Purchasing manager index. Okay, so basically what this is a report from businesses calculated as an indicator of the overall current economic project or condition. So this means that supply managers for right now are thinking that the economy is going pretty well. I would actually think that if supply managers are thinking that the economy is going well, then that would actually be good for the stock market. Obviously, like, we have a crap ton of demand that we can't keep up with. So if supply managers are saying that we're good, then I would think that means the supply chains are starting to get better. And this came in at 56.5 versus 53.3 expected. So I would think that that's actually bullish. That would mean that, with more production, supposedly, according to this report, prices should actually come down. The higher your supply, the lower your prices will be, assuming that you have the same demand. But let's check out SPY for this. It's trading at 401.90 or 402 now. I don't know if it really falls much more. It's already fallen 1.2%. So I think I'll make a day trade on this. And I think we stay above either 401 or 399 today. So let's check that out, see how much that'll pay us. But the basic reasoning behind this is if the producer manager or the production control managers basically are thinking that we're doing pretty well. That should reduce inflation. And I think we either stay above 401 or 399 today. I would be more comfortable, obviously, with 399. So I would sell a 399 put, buy a 398 put, and that one's only paying $6-7 in credit, so not a great risk reward ratio. If we go up one strike price and assume SPY is going to be, it's already going up to 402.3. If we assume that it's going to be above that 401 mark that we had, that one's actually paying 25 in credit. So that's a decent, 3-1 risk reward. Given that it's close to the strike price that I'm assuming, I would be kind of, more hesitant on going ham on it, opening a crap ton of these. But I do think I'm pretty confident in this, and I would say that it's probably worth around $500-600. So we'll call 600 first, and they're paying 25 each. So we'll open between 20 and 25 of these. 20 would only be $420 in credit. 22 would be $528, and our risk for that is, a decent $1,700. But obviously we don't want to take that, massive loss, and we want to set up some price levels for exits. So I think, let's see, it's already starting to bounce off of the low that it created. I would say if it goes below 402.04, that would be an alert to get out. So we'll set an alert for 402.04. Get rid of the $400.81, and hopefully get into this pretty quick. So they're going for 19 cents a piece now. So we'll have to open 25. We are increasing our max loss to 2,000, but as long as we close it before it goes below, 401, we should be pretty well off. So 25 of these at hopefully 20 cents a piece. The bid-ask spread is moving around a lot, but we did end up getting filled. So new trade alert for the premium Discord. Assuming SPY will be above 401 today, based on that PMI report that just came out. So let me post that. It's going to be a day trade, obviously, since it expires today. All right, so new options alert, premium, whoops, 101. I can't type. Just opened a new, I guess I should tag everyone since everyone is in the chat. New SPY, put credit spread. Strike prices were 401, 400. Expiration date is today, 12/5, at 20 cents each, I think. Day trade. Let me just double check that I have the price right. We actually got a little bit more credit, 525 over 25. We actually got 21 cents credit each. So let me edit that to be accurate. Now, of course, we want to keep tabs on where SPY is trading. As long as it's above that 402 mark, I think we're fine. Currently, we're bouncing at the 402.95 mark. We're kind of hesitating at it. So we'll see how this trade works out. And for the upside, I would probably want to close if it goes probably above 404.45. The odds of dropping back down to 401 would be pretty low at that point. So I want to create an alert at or above the 405 or 404.85 mark. Currently trading at 402.80, so still a decent way to get up to that level, but could also be a decent iron condor opportunity too, given that we have the oil kind of issue still ongoing. That is kind of diminishing expectations, but that economic report I think is good for the market. So I would probably say likelihood of SPY being below probably 405 would be decent. Um, Given that it's 3 price levels away. 406 if you want to be conservative. So we could turn this into an iron condor. Right now they're not treating us too well. We bought them at 21. Now they're going for 24. So if I wanted to close them, I would pay an extra $4 per spread. End up taking a $4 loss in each spread. Big candle down on SPY just now. Yeah, it was a decent fill. I think I probably could have gotten a better price had I waited. Obviously, it's trading at 24 now, but let's see. If we sell the 405, buy the 406, that's actually paying another $15 in credit, which is decent. So that would add to the 21 cents of credit that we originally got, since we're using the same collateral, since SPY can't be both above 405 and below 401 at the same time. Like, that would be literally impossible unless we had two separate universes. I do believe in the multiple universe theory, but right now I'm just in one universe. So anyway, right now the 406, 407 call credit spread's paying 10. I would be more comfortable in that, but the risk reward ratio isn't great. So if we add the 10 to the 21 that we already got, then we would have a total of 31 credit for each one. I opened 20 spreads if I remember correctly. Let me actually type the analysis for this one after I open this. 525. Okay, so we opened 25 of them. Sometimes I like to open a different amount of calls versus puts, but this one I think would actually be reasonable to open the same amount. So we would open around 25. Currently going for 8 cents now at the bid. It's another $200 that we can make. So given that there's no, any other major news coming out today, I think this is a decent trade, decent opportunity to take. So 25 of these now at 9 cents a piece. Let me see. 225 or 25. Yeah, 9 cents each. Right now it's going up to 403, of course, as soon as I open it. Probably going to be down for it right away. But yeah, so we turn that put credit spread into an iron condor. Basically, we have equal and opposite forces of the producer price index kind of rallying the market, but then the oil issues that we're having taming expectations. So I think we're going to have a flat day today. So this is another new options alert. Day trade. Everyone just opened a new 406, 407 SPY call credit spread expiring today, 12.5 at 9 each. Turned the 400, 401 put credit spread into a 401 to 406, 407 IC. PPI, producer price index, came in good today at 55-ish. Let me double check the numbers so I have them 100% correct. 56.5 versus 53.3 expected. 53.3 expected, which shows that, let me double check that I know the exact verbiage that I want to use. Supply managers, basically. Supply managers are optimistic about the current economy, which should lead to lower inflation. On the other hand, oil prices will likely go higher on Russia not accepting price caps. So, equal balance of good and bad news today. Hence the Iron Condor. Right now, SPY is trading at 403. The put credit spreads we opened are up 100. The call credit spreads are down 75. So we're just about break even for these. And again, I got my price level set up. So if we go probably above 404.45, I would be concerned on the call side. If we go below 402.04, I'll be concerned for the put side. But we do have all the way up to 406 for the calls and down to 401 for the puts. So I could possibly, raise my upper risk to 404.85, but I think 404.45 is fine. We haven't really traded much above that so far this morning, so I think the odds of going up there is pretty low, and as long as we stay below that and above the 402.04 mark, then these Iron Condors should serve us well. But yeah, so those are the SPY trades for today. Now let's move on to that GME trade that I wanted to open earlier. So I was assuming that it would probably be below the halfway mark between 24.42 and 27.17. 27.17 plus 24.42 would be 51.59. Divided by 2, you get 25. So basically $26. So I'd assume that it would either be below 26 or above 29. Currently trading at 27. So not really much room on either direction that we needed to move. But I'm going to open a probably a strangle, so two-sided. Assuming that it'll either be below 26. So what I'll do is I'll find the break even. That would put us at 26. So 27.50 put. Well, that's a call actually, so that doesn't. So below 26, we would need to spend. We'd have to spend a pretty decent chunk of change. Let's see, 28.50 minus 278 would be at 25.72. I think I'm just gonna do a long debit spread strangle instead. So I'm gonna assume that it'll either be below 26 by buying a. I like to keep them $1 wide just to make the math easier. But the 26, you're paying 61 cents, which is pretty high, but given that it's trading at 27, that's not unreasonable. And then for the calls, if you're assuming that it'll be above 29, you're paying $95. Well, that's the bid ask. So you could probably buy these at 70. No, actually, the bid is at 69, so the odds of getting filled at 60 at 70 would be very low. What am I thinking about NEO? I'll talk about that after this. But let me go over to the Aries portfolio, see what they're going to quote me for this GME spread that I want to open. So we're assuming that it'll be above 29 or below 26. I could actually, I would think that the 29 calls would be cheaper just given that the strike price is further. So we might open a put and then, we might open a call assuming that it'll be above 29 and then a put debit spread assuming that it'll be below 26. I think that would actually be best course of action. So let's try that instead. So let me open a call option with a break even above 29. And that one we can actually get very, very cheap. That one we're only paying 95 for a 28 call, so our break even would be 28.95. I would want a little bit more upside. So if we use a 27.50, Their break-even price would be 27.5 plus 113, 28.60. So that means we can make about $40 for every 100 that we spend, or 113 that we spend. So that's not a bad opportunity. About 30% leverage. So I'll buy the 27.50 call, and the put side, again, I want to do a put debit spread, assuming that it'll be below 26. So buy the 27, sell the 26. So if we look at our, oh, that would still mean that we lose money. That's interesting. That would still mean that we lose money on the downside, so maybe we just do a regular long call. I'm hesitant for a long call. Yeah, because I guess with the put debit spread, if you're paying 60 for it, you can only make 40. Maybe we edit the ratio of how many we open. So if you want to do ratio, maybe we open 2 for every call that we buy. And that, yeah, so that reduces our max loss. So maybe we open 3 now, and that'll put us at a profit of 12 for each one that we open. Let's try 5. That obviously that would mean that we're more geared to the downside. We'd be spending $421 to make $100 on the downside, and then obviously unlimited potential for the upside if GME does go above 29. So I think this is a decent opportunity. I wouldn't spend a lot of money on it just because it is in earnings. We don't know exactly what's going to happen. I would probably be willing to spend actually $500 on it though. So let me open more debit spreads, because I know if I open another call option, then the max loss is going to be larger. But if we open 6 debit spreads, 1 call, that comes in at $475, and I think that's a decent trade to make. So this is kind of a weird option that I'm opening. So the bid-ask spread is going to be wide, 418 and 476. I think we might be able to get it for $455. So our max loss would be $455 if it's between. Let's see. If it's between 26 and 27, and then if it's above 29, we start making profit. If it's below 26, then we make $145. So let's see. I think we can open for $455. We'll try that first, and then if I have to, I might. Yeah, we got filled at $452, so I don't even have to keep going on that tangent. Thank God. But yeah, 3 option order. I'm gonna take the screenshot on Robinhood. That way, it's a little bit easier to read. Or I'll take it on my phone so it's easier to read. All right, let me post that in the Discord. And then let's see. So new options alert, premium. And I want to get back to one of the questions that somebody asked me about Neo. So hopefully you're still here. Just opened a GME 27.5 call and a 27.26 put debit spread expiring this week, 12/9 at 452. GME earnings Wednesday after hours. IVP is like 50 something. I wrote it in the premium watch list, so we can just go to that to pull the data. IBP is 35, so very low compared to previous year. Let me actually copy and paste the price analysis too while I'm at it. It's 35, very low ahead of earnings, and I think it will make a decent move either direction for earnings this week. And then I'll paste the price levels that I have that I'm looking for. But going back to NIO, Trenton Schmidt asked for NIO stock. I think that NIO and a lot of electric vehicle companies, even if they're based in China, they're in a lot of trouble given that the economy is starting to slow down. Especially NIO, given that they are, kind of a premium brand. I know that they're working on coming out with a lower price brand. Obviously, that's going to be less profitable. And most companies that have, made vehicles have gone bankrupt, right? Or they merged. So Chrysler, what other companies? General Motors obviously went bankrupt in 2008. They ended up merging with Stellantis in I think like 2013 or 2014. I don't remember exact dates, so don't quote me. But most companies, other than, at least in the United States, have either merged or they went bankrupt. And the only two companies that haven't so far are Ford and Tesla. So I think that the odds of pretty much any vehicle company is pretty low of being able to sustain themselves. I think that chances are NIO is probably going to merge, given that there are so many different Chinese electric vehicle companies out there already. I think it's more likely that they're going to merge than one company I guess one company would come out on top, the one that decides to merge with everybody, that can afford to merge with everybody. But I think like the smaller brands like NIO, Li Auto, XPeng, I think that they're going to have trouble. At least in the long term. For the short term, if you're asking probably about their earnings, I'm not sure if that's this week or not, but they already had their earnings at -30. So their earnings is starting to improve, only -30 cents versus -134. But again, I think the long term for NIO, Li Auto, and the smaller companies is kind of not shady, but like it's going to be very hard for their companies to become profitable, even with the assistance of the Chinese government. I think that at some point it's going to be more feasible for the companies to merge rather than all the companies being successful. DRSD shares, never heard of that company. Took the put credit spread on SPY, hoping it pays for lunch. Yeah. Nice little $600 lunch. Seems about right with this inflation, right? Yeah, so they're up $125 so far this morning. Currently, SPY is trading at 403, so it's basically at the middle between our strike prices that we need it. Between 401 and 406. I'm going to keep on holding. And then DRSD or DRDS, let me check on that. I've never heard. Direct registered shares. Oh, curious to see the amount of direct registered shares. So you're talking about probably the Chinese issued ones to the United States versus the ones that are actually owned in China. Apes are trying to lock the float. Well, trying to. Yeah, let's see. For I'm assuming you're talking about GME if you're talking about the ABES and AMC. I'm not a huge fan of, the degenerate stocks. I don't really know what to call them. I do think that there's an opportunity to trade them for their earnings report. But let's see. GME, you're asking about the float. Doesn't have that on here, obviously. Doesn't have it on here, so we have to type in GME float. I wonder how much of it is shorted still. Degenerate stocks. I mean, I'm a degenerate myself. Like, I literally tell people that my job, quote unquote, is being a professional gambler. Obviously not professional in the sense of, like, being good at it, but, like, that's what I do for a living, is gamble on stocks going up or down. Like, I'm a degenerate myself. I will admit it fully. I don't really care what people think of me. But yeah, GME, let's look at the flow. Maybe check on their short interest, and that'll probably be the end for today. GME float. Oh, Yahoo Finance. Yahoo Finance should really spin themselves off and, like, sell shares of their company. I think that would be a decent idea. Besides the point, though. Market cap, we're looking for float. 253 million shares in the float. Short shares is actually only 20%. Might not be accurate given dark pools and everything. Looks like I got a meeting in about 30 minutes. But 20% short versus the float. So obviously that's come down a lot from the, what was it, like 115%. But given, the dark pools, there could be, a decent chance that a lot of the shorts are held in the dark pool to where we can't see it. But yeah, that's enough about the manipulation of the stock market. GME is on uncharted waters. Yeah, one of the best options mentors I have. Let's see. Thank you for that, Martin. I like to think of myself as a crazy man, but it's nice that people find me somewhat intelligent. SPY's trading at 402.40. We might actually need to close the put credit spreads. Let's see. Decent drop in candle. Basically, we got rejected at the 402.95 mark. It's what it looks like. See if there's any news. Homeland Security Department says Biden administration plans to extend Real ID and full enforcement. Oh, that's so freaking stupid. That's just another way for the government to make more money. Like, why isn't a driver's license a real ID? Why can't I fly with a driver's license? Like, why does the government need another $60 for me to pay for a real ID? Ugh. It's just the government trying to take more money. Anyway, enough about the government and politics. That's the end of the trading day for me. Obviously, we want to close the put credit spread if we go below 402.04. So keep that in mind. I'll send the trade alert once I exit that trade. And then for the upside, we're assuming that it'll be below 404.45. So we'll close that call credit spread we opened if it goes above that. So going back to that trade, still holding it, obviously, since y'all haven't seen me close. Assuming SPY will be between 401 and 406 by the end of today. So, yeah, hopefully y'all have a great trading day. Hopefully y'all make some good profits. And I will see y'all tomorrow at the same time, 9:30 in the morning. All right. Bye, everybody. Thanks, Eric.